Hi, my name is Ted C. Yuba, and I'd like to welcome you to realprofit.com. We're going to talk a little bit today about the paper business. That's the business that exists because, well, you know those for sale by owner homes? A major part of those owners selling their homes are in fact doing the financing. They're the ones that receive the payments. It's an unknown industry. Therefore, in spite of major misunderstandings, I'm going to reveal how easy it is to get started in the paper business. You're going to love this. And we're going to talk about three things in this video. We're going to talk about the three parties to a note transaction, the tools you use, and the training that it takes. But first, let's talk about who is not a party to the note transaction. Amazingly, it's not the homeowner. They're not involved. Man, they're living their life, doing whatever they do. All the note buyer is interested in is, are they making payments? Or even if they're not, sometimes we buy defaulted mortgages. Then the question would be more relevant, what is the property worth? Because there might be a foreclosure in the future, right? But so the three parties that are involved are, one, the note holder, two, the note buyer, and three, the note broker. This, of course, broker is you. The note holder, they want to sell their note. They'd rather get cash. They've heard they can, but they don't know how to go about doing it. Remember, you can't go to the bank and say, I want to sell my note. They'll laugh at you. Well, you ask them, well, where do I go? I don't know. You know, well, where they go is, and we teach you how to find them. They find you, and that's the whole thing. They don't have a lot of options. The note buyer is someone who's got money and would like to receive, it's the way we call it, is the income stream. And think about it. It's a passive autopilot income. It's not like a business where you have to show up and work every single day. It's like the bank. How often do you see your bank when you're making your mortgage? Unless something goes wrong, you probably never see your bank. Right? They don't care about you. They just want the money. Well, that's what a note buyer is looking for, that income stream. He's willing to pay for it. The note holder is willing to sell. They're not locating each other. That's your job. You're the broker. And when you put these two parties together, real estate-sized commissions fall down into your lap. And that's the beauty about this business. Real estate-sized commissions. We're talking about thousands of dollars. Most people, most deals, you're talking about $3,000 to $7,000. Now, we have had less. One time we did a $10,000 note. Well, there's not $3,000 in that. One time we did a portfolio when there were like a dozen notes. There was $68,000 in that. Generally, though, you're talking about a note value of 100, 150, 200, 250, 300, 350, 400. They go up to about $1 million because we're dealing with residential. And you're talking about, it's easy to make real estate-sized commissions. And what is a real estate commission? Generally 5 to 6 to 7%. So it's everyday stuff to make $3,000 to $4,000, $5,000 on a $100,000 note. Now, when you get up to $500,000, you're not making the same 6%. But what if you make a little less? Real estate-sized commissions. I tell you. Now, what tools will you use in this business? They're very simple. You will use what we call the mortgage worksheet and your financial calculator. Now, that is, until along came the internet age, this is the way we did it. We also used to use fax machines. And you still can. They all work perfectly fine. What we need to know to do our initial analysis, the go, no-go, we need the information. And as you can see, it asks things like, is it owner-occupied or is it a rental property? What was the sale price? What was the cash down? What was the original amount of mortgage? What is the original amount? What is the term? What is the balloon? Date of first payment? What's the information on the payor? And you need a financial calculator. Now, that's what it used to be like in the old days. In the new days, sometimes it gets a little bit simpler. Boom, you just scurry up to the note submission form online. We've got them. That's how you can submit your notes if you're submitting them to us. If you're submitting to someone else, and we teach you how to find those people, it's the same thing. You can write out the worksheet if you want that we were just looking at, or you can input the information and you press submit, and it all comes out in an email, and it's all tallied and organized. This is what people need to know to get a look at the deal. Now, there will be what we call due diligence. There will be underwriting. In other words, people are going to verify the facts. For instance, the homeowner says, or the note holder says, they've made every single payment on time for the last 4 years. On this form, which is our initial go or no-go form, we take their word for it. Before we buy the note, we will evaluate and make sure that they do. We'll ask for a bank statement or something like that. And that's why, by the way, now you're coming up with the major drawback of this business. That's why it takes 3 to 4 weeks to close a real estate deal. These are real estate deals. Don't you know that everywhere you go, the normal standard is 3 to 4 weeks? It's because people have to check all the facts and figures. But that being said, remember, that's offset by the major benefit of real estate-sized commissions. So now let's talk about the training that it takes. It's very simple. It's easier than you'd ever imagine. You need to know 3 basic areas. You need to know about marketing. You need to know how to find the note holders. You need to know how to approach them in a way that will appeal to their hot buttons, to their pains. All of that is in the contact course. You see, finding the people to buy the notes, that's a little bit easier, a whole lot easier, because you're dealing with people who usually buy multiples, as in pension funds, well-heeled private investors, specific because it's not most, but mortgage companies that have an interest in knowing what's going on because they can get a better deal than they can get creating and originating mortgages new. And you need to know this. This is what the contact course is all about, marketing. By the way, we've got some killer copy in there, some postcards that you can mail out. We paid a fortune to have those created. They hit the hot buttons and they go out to people who hold notes, because we're going to tell you how you can get a database of people who hold notes, people who are receiving payments. It's like shooting fish in a barrel when you know how to do it right. And then course number 2, which is the negotiator course, is all about understanding value. In fact, I tell people that the most important chapter out of there's 3 modules. The most important chapter that you'll ever have about really becoming proficient in the note business is in the negotiator course. It's manual 2, is chapter 2, and it's all about the financial calculations. That's how we understand value. The term for it in our business is the time value of money. Now, I'm not going to go and explain the whole process here, but I'll give you a real simple illustration. You take a $100,000 note, that's $100,000. But yet, if you look at what it's going to cost you over 30 years, that could be around $300,000. What's the value of the note? Well, it's a $100,000 note. Now, you, of course, will learn to pay less than that. Specific, easy ways will teach you. That's what negotiating is about. But first, you have to understand the value. The homeowner, totally unschooled, could think their note is worth $300,000 because that's how much they'll get. Here's the clincher: over 30 years. That's what we're talking about, the time value of money. These are calculations. These are things that you'll learn to love, and it will make you a lot of money. And whenever we package higher courses, they always come together. So you get the contact course and the negotiator course at level number 2. You know, it's like going to school. You build one on top of the other. And then the broker course, where you learn how to build a financial empire. Because here's the whole story about it. When these checks are coming in, $5,000, $7,000, $10,000 or more dollars per transaction, you're doing several transactions a month, you're going to have money, and you're going to see how beautiful it would be to build a financial estate, a financial empire. Now, when you go into investing for yourself rather than flipping, which is what That's the fast cash. You find the note holder, you find the note broker or the note buyer, and you put them together and you make money. This is doing it for yourself, and you need to know a lot of other stuff too to do it right. This is what you get in the broker course. Of course, they all three come together: the contact, the negotiator, and the broker. Here's the sum up of everything. Now, I invite you, of course, to read the page, but the sum up is you're dealing with an easy business that's unknown, therefore there's not a lot of competition, and you've got real estate sized commissions. Read the whole page. Make sure you get all your questions answered. And then I hope to see you making those real estate sized commissions yourself. This is Ted C. Yuba, note broker, saying bye, friend.